Good afternoon, traders. I'm Michael Sabo, Senior Commodities Broker with RJO Futures on Wednesday, October 13th, with some commentary here in the energy market. So let's get started. Crude prices have been mostly firmer here today. Currently, we're trading up about 76 cents. December oil right around 93.80. We hit a high today, though, up around 94.54. So seeing a lot of trading here on the positive side. Brent's got a firmer tone as well. We're up about $1.35 there. December Brent at 107.16. Nat gas is off about 5 to 6 cents, and the complex is about 4 cents higher. So certainly, catching that bid here. Quite a different story from what we saw yesterday. Oil prices basically selling off almost all day yesterday, closing down near the lows, down around 93, and then seeing that market really kind of turn here to the upside today. I think several reasons of what we got going on here. One, I think technically that market has been extremely oversold in my opinion. And although I thought the market might be able to target up to around 96, such a weak tone in there here in the long-term outlook, the market kind of failed. And of course, we got that sell-off yesterday, but getting a little bit of that technical bounce in there today. Now, EIA data is delayed a day. We'll be looking for that here tomorrow because of Veterans Day, although most traders are looking for another build. And if we get another build, that's going to be 8 weekly consecutive builds there. So we'll stay in touch. We'll see what those numbers have to say. One important thing, though, that I was reading earlier today is that U.S. oil production for the month of October averaged about 7.7 million barrels per day. And to put that in perspective here, what we're actually seeing is that the imports we're actually starting to the domestic oil production is starting to outpace actually imports for oil. And that's going to be the first time that we've seen since 1995. So we're certainly seeing, the big increase in U.S. Oil production. And it's estimated that we'll stay on track here for the rest of this year at about 7.5 million barrels for the rest of 2013. And as we go into 2014, they're expecting that number to climb to as high as 8.5 million barrels per day. So we're really, this has been the tone that the market has been setting for some time. We're really seeing, domestic oil production ramp itself up. And of course, we know on the demand side of things that demand remains sluggish at best. OPEC came out and actually announced that they think that the output for oil is going to outstrip demand here in 2014. So, what does that all mean? Well, it's kind of been the reoccurring theme in these posts that I think what you're ultimately going to see is you're going to see crude prices continue to come down at this point. Unless we see a huge economic recovery, I don't see that coming down the pike anytime soon. Where we could see that excess oil really absorbed. It should continue to build to the current stockpiles and put further pressure on oil here for some time to come. Now, in the short term, there's obviously, there's ample opportunity to play this thing in the long side of the market or the short side of the market. But I think as a longer term, longer term trader here, I think, you really want to be eyeing the downside in crude prices right now. So give me a call, shoot me an email. We could talk a little bit more about that and talk about some different strategies and how you can position yourself and where I think crude prices are heading next. Of course, remember that futures trading does involve a substantial amount of risk. It may not be suitable for all traders. Good luck and good trading.